Good morning to all traders and welcome to another Market Insights video. Today is February 26th. It's Friday and it is the last trading session, also Friday of the week and of the month. Yeah, FX traders are getting ahead of themselves. It looks like to me, pricing in a premature interest rate hike, or would say, or some sort of tightening from the Fed, as global yields showed yesterday. Now, this historical drop in bonds, okay, even economists were going back to check when actually that has happened in the past, because the velocity of that drop was quite historical. Came about despite the recent reassurances we've heard from Fed Chair Powell and also other FOMC members that they're not going to tighten and they will continue QE, and there's not going to be an interest rate high anytime soon, at least 3 years. Now, the sell-off, the velocity, as I said before, suggests that the move can also be attributed to also technical and other and probably speculative reasons. Okay, amidst, as I said, the end of the month trading, also some sell side hedging that is related to interest rate risk. Okay, linked to mortgage-backed securities. Now, with the dollar gaining traction once again, Euro, Pound, Aussie, and other FX measures came under pressure. Despite their own bonds market sell-off, was supposed to create some sort of upward pressure. Obviously, since the biggest bond market is in the US, the US dollar had an advantage. Now, of those, the ECB was the one to jump the bandwagon first, okay, in and signaling that it was they still have another 1 trillion euros on under their PEP from the pandemic emergency program to buy bonds for another 1 trillion euros. Okay, so this is a big step in my opinion. Okay, indicating that, well, investors can go ahead and sell bonds. The ECB will be there to buy. Meanwhile, now the Biden administration launched a retaliatory strike in Syria yesterday, although it hasn't really echoed in the markets as much as an event that indicates that there is risk of war between the two would. It's possible that it will have an impact, a larger impact going forward, specifically in the oil markets first, as well as probably safe haven gold. Okay, now. Let's go ahead with Euro-Dollar first, and then we're going to have a quick look on Pound and Aussie. Pound and Aussie have similarities. Of course, all of them have, because they all dropped, but I don't see the Euro-Dollar decline sustained, whereas on the Pound and on the Dollar, I see. And that's purely on technicals, yes? So, last time we talked about that becoming 1, 2, 3, 4, and 5. Still the same case. But we only did the 100 Fibonacci extension, of that, of 1 and 2 over here at 122.39. And we started falling. And we interacted with that wave as well. Now that tells me, that this could be an ending diagonal. Okay? And it could last a bit, could go somewhat like that, and we could be looking at a fresh high anywhere up to 124.56, because this is, the 100 Fibonacci extension from 1 and from 2, which is the rule of equality when we're talking about ending diagonals, right? But could be a case that this is 1, 2, 3, 4, and 5, a multi-structural lower degree impulse in wave 3 of this wave 5. Okay, so we could really extend to higher levels, like above 126. The other scenario is the one we talked about, that perhaps this is just an A, B, and a C, and we're going to turn now lower, and that for a W, X, and Y. This would, of course, make this a motive wave, because so far we haven't broken below that level 1, wave 1 over here. And the other scenario, which is also is a good candidate, is that this is an ABC and we're going to get some sort of W, X, and Y here or something like this. So that would be an A, a B, and a C for an expanded or a running flat. Most likely running variation, but either could play in. Now, the signals on euro dollar are bullish, so pay attention to that. Now for the pound, I called the 141. It was on Tuesday, if not mistaken. I called 121 as our reversal point. Well, we extended a bit higher. And this is actually a good sign, to be honest, right? It's a good sign because, we had more sellers stepping in, obviously. Look at this volume now. This volume, guys, is bearish volume. Indicates to me that we probably have a reversal over here. That's going to be wave 1, 2, 3, 4, and 5, and we're going for fresh lows, okay? Obviously, this is one of the scenarios. The other case would be that this is 1, 2, 3, 4, and 5. That's going to be A, then we're going to get B, then we're going to get C. We're going to come and meet that trend line down here and then move higher, okay? This scenario would mean that this is 1, 2, 3, 4, and 5, most likely, yeah? So we're going to have 1 and 2, which means that this is not a 4, and we're not expecting a 5. This is most likely a wave 1, yes? And the end was down there of this bearish sequence, okay? So this is what I'm looking for the pound as well. So I will be looking first to get to around this trend line is below 139, 138.60, well, yeah, I guess around 138.80, yeah, just below 139, but we're heading there in my opinion, okay? And last but not least, of course, for the Aussie, guys, Aussie, I called this move as well. I think it was, that would be C here, yeah? I think it was on Tuesday as well. If not, it was last Thursday. I was expecting the 79.80 to create a small pullback and that we go to the 80.40. But I'm happy with this rejection over here and the false break because at the end of the day, it's just a very short wave, wave 5 over here because we've got 1, 2, 3, 4, and 5 over here, yeah? We did the 80, guys. We got the 80 cents. That volumes, again, equally very similar to the pound. These volumes are bearish. It could be a case where we're going to be ABC. We're going to get down here a double bottom and we'll move higher, yeah? But I doubt this is going to be a case, yes? Or likely the scenario that I'm also supporting is that we ended this move on the upside and now it's time that we reversed lower down. So we're looking at least the 75 cents, okay? So guys, this will be all for the day and for the week. I hope you enjoyed the video. If you did, you can show your appreciation by liking our button down there. If you have an alternative scenario in mind or you want to ask a question, feel free to do so. I will get back to you as soon as I can. Enjoy the last trading session of the week and the month. Enjoy your weekend and we'll speak again next Monday.